Hello and welcome everybody, it's Stephen again and welcome to another video in this investment education series. So today we're going to be talking about a subject that's at the front of everybody's minds at the moment, and that subject is inflation. So you may have noticed yesterday that the markets were a little bit volatile, to say the least. The market started off pretty slowly and many major stocks were down. By the end of the session, we saw a nice uptick in the price of stocks, especially growth stocks. So why did that happen, you may ask? Well, the main reason was yesterday that there was a speech by Jerome Powell, who is the head of the Fed, in which he actually outlined that he actually plans to keep interest rates at around zero until 2023. And then he also said that he was actually fine with the way that inflation was going, and that although that there had been some increased inflation in 2021, he didn't expect inflation to be that dramatic. So this was a very interesting stance by Jerome Powell, and this actually caused a lot of the stocks to actually rise throughout the day. So this brings me on to the video. So I wanted to do a video today which states the 5 main assets that will actually do very well in an inflationary environment. There is a lot of anxiety in the general public that there could be inflation on the cards. The US have adopted a QE to an infinity outlook since the last financial crash. And actually in 2020, due to the coronavirus, there was actually an unprecedented amount of new money that was actually put into the monetary supply. So this gave a lot of people a lot of concerns. The first asset that I want to talk about that should do very well in an inflationary environment is real estate. It is very clear to see why real estate would do very well during inflationary times. Real estate is a hard asset, and when you are choosing real estate, you usually choose real estate in an area which is desirable. There's not an abundance of properties and people need to live in them. So the price of that real estate should continue to go up and actually should outpace inflation as more and more people want to live there. Also, what will happen is that if you are planning to rent out your property, it is likely that your rental rates would increase as well. So it is very good real estate to protect you from inflation. Also, if you look at more stock market assets to do with real estate, these also should do very well in inflationary times, such as REITs and other real estate assets that you can buy and ETFs. The second asset that I would like to talk about that should do well in inflationary times is precious metals. So I'm going to focus specifically on gold and silver because they are the main precious metals, but also there are other precious metals that will do very well in inflationary times too. So why will gold be a very good asset during inflationary times? Well, gold is a hard asset. It has a cost in order to mine or excavate the gold, and also it has a level of rarity. There's only a certain amount of gold that can be physically mined each year. This should ensure that it keeps its value, especially when we compare that to the fiat government monetary policies where they've been printing more and more money into the monetary supply. So all in all, I think gold will do very well. Also, silver should do even better in my opinion because it has a lot of industrial uses. So silver is used in many different areas, from jewelry to dentistry, and is also used in other things such as EV cars and the manufacturing industry. It's also important to note that in 2020, due to COVID-19, that there was actually a slowdown in the mining activities for gold and silver, which is quite natural during a pandemic. However, what I think is as the demand continues to increase for the industrial uses of gold and silver, and that there's been a lagging effect from the lack of activity in terms of mining, I think that the price is likely to shoot up in 2021 and beyond, especially for silver, because the silver to gold ratio is very advantageous at the moment. The third asset that should do really well in inflationary times just happens to be my favorite subject. And that subject is Bitcoin. Bitcoin is the apex predator of hard financial assets. So what do I mean by that? Well, Bitcoin is extremely scarce. There will only ever be 21 million Bitcoin. And if you compare that to the world population, it is very minuscule. So every 4 years, also there is something called the Bitcoin halving. So right now, miners are actually validating the transactions on the Bitcoin blockchain. And for that, they're actually giving a Bitcoin block reward. Well, every 4 years, that Bitcoin block reward halves. So that means it is disinflationary. So it means that the number of Bitcoin rewards will actually go down for each miner. So eventually, when we get to 21 million Bitcoin, there will be no more Bitcoin that will go into circulation. So that means that your Bitcoin is extremely scarce. And in inflationary environments, as the weakness in the dollar prevails, what will happen is that your Bitcoin will be worth more dollars, especially if we take into consideration other factors as well. So obviously the demand has gone up with institutions, with corporate companies, both private and public, pension funds, and also insurance funds. So the demand is also increasing, the dollar is also weakening, and there is a very set monetary policy from Bitcoin, which is set in stone and can never be changed. So although it's number 3 in my list of points, it is actually probably the best asset that you can own in an inflationary environment. The fourth asset that should also do well during inflationary times is actually stocks and shares, and that may not surprise you to know. So why will shares do very well during inflationary times? Well, when you're buying stocks, you have to always remember that you are actually buying a small percentage of a company, and you are looking to choose companies which are able to generate a lot of cash flow and are growing, but also protecting their capital and are able to use that new money and those inflows of money in order to make new acquisitions or launch new products. So when investing in the stock market, you have to be cognizant of the fact that you need to beat inflation if you want your money to work hard for you and for you to have more purchasing power. So you may look at areas such as growth stocks, or you may look at stocks which may not have explosive growth, but can also give you a high dividend, and you can outpace inflation. The fifth and final asset that should do well during inflation is index adjusted bonds. So I'm not going to go into this in a great amount of detail. And I also think there are much better investments. But if you want to be safe with your money and want to make sure that you keep up with inflation, index adjusted bonds may be a good way of doing this. So whether you believe Jerome Powell's words or not, I think it's really important that you need to prepare for at least a scenario, but potentially the eventuality that there could be increased inflation in the future. So you need to consider, what is your risk tolerance and what type of returns are you looking to make? Are you looking to keep up just with inflation and keep your purchasing power, or are you looking to outpace that, which also comes with more risk? You also need to consider, from your own point of view, which assets will do better in an inflationary environment, and weight your portfolio accordingly. And also, I want to say again that I think it's very important that you keep your money invested in the markets, because otherwise you're going to erode your purchasing power over time. And if you try and time the markets, which I believe is a futile act, the only person that is going to get rich is your broker. So thank you very much for listening to this video. I hope you enjoyed it and found it informative. And please let me know if you have any comments, please leave them. And also if there's any other subjects in the future that you want to know about, then please feel free to let me know. So thank you everybody and happy trading.